Good morning, everyone. Welcome back to the webinar. We're going to give people a little time to get into the system. It's a new system, so I hope you enjoy it. For those of you who are using it for the first time. Just a preamble, our topic today is one which I'm very excited to talk about. I've talked about it before, towards the end of last year. And it is, of course, cryptocurrencies. And on this screen, you should be able to see me and the slides, so we'll go with that for the time being. Bitcoin and cryptocurrencies, what on earth is going on? For those of you who are in and have bought some, well done. And I hope you're enjoying the ride. And we'll come back to kind of the progression of that as we go through the presentation. And what I really want to get to when we get there is, what are these things actually worth? How can we make some kind of evaluation of their valuation? And are they the future? Have they gone up too much? Is it just a bubble? We'll get into that just in a few slides' time. So a lot of people coming in. So again, welcome to everyone. We're talking about cryptocurrencies, but let's talk first about, of course, markets. And let's see what's been going on in the last month or so. It's been absolutely crazy, as you've probably noticed. And we have had the strongest, fastest, largest rally in equity markets, I think possibly ever. Markets are up globally 75% since March the 23rd, which was the day the Fed first put unlimited amounts of support into the system. March 23rd last year, I should say. So over that 1 year, pretty much anniversary, markets are up 75%. It's been an extraordinary rally. And we've talked about this through the year. Are we in bubble territory? Are there fundamentals to back this? What is causing it? And I think this next chart can kind of help us to frame that discussion. I found this quite helpful. On the left, resurgent COVID, weaker growth, tricky times for the market. In the middle is kind of where we are now, which is the Goldilocks period, where we have strong growth, strong recovery from COVID, markets and economies opening up. The UK actually probably leading the way, followed by the States, Asia as well, of course, and China. Europe a little behind. They're not doing too well on the vaccine front. But we've got strong growth coming through. We're going to get very strong growth this year and into next year. And we've got a very easy Fed. So very low interest rates and strong growth. That's a kind of nirvana for markets. What we'll move into in, I don't know, kind of a 6 to 12 months time is roaring consumption as people come out of lockdown and possibly a less easy Fed. So as interest rates go up, that's a much more difficult environment. When you get the actual growth and rates going up, it's a much more difficult environment for markets. That's generally the framework of where we are. And we've also got, of course, the retail, what I will say is a bubble. And we've talked about this before. This is an interesting chart about the stimulus checks, which Biden is sending out right now to households in the States. $1,200 per person, so quite a lot per household. And of people with an online brokerage, this is the proportion of that check they are looking to invest in the stock market immediately. And you can see it's by age group, and it's by income level, it's by experience in the stock market. And you can see about 40 to 50% of that stimulus check, about half the stimulus check will go straight into the stock market. And at the bottom, you can see that of those people on online brokerages, around half of them have got less than 1 year's experience in the stock market. So that's a little scary, but a lot of money going into the market. And of course, it's an easy game when markets are going up. And people are learning with less than 1 year's experience that markets only go up. Happy days. Good luck to them. The market currently is expensive. Here at Old Mutual, we've been riding this wave. I'm glad to say our multi-asset teams have been riding this very effectively. We need to find the time to kind of trim our positions. Markets are currently into expensive territory. This shows market capitalization to GDP, price to sales, price to book. So kind of long-term measures. and they show that we are well above, or near to, or in some cases well above the last bubble, which was the 1999-2000 tech bubble. So markets are, without question, in expensive territory. And risks are rising for the markets. We've talked about this before. Inflation, expectations are picking up. Inflation itself is starting to pick up. We're seeing it in China and parts of the States. So this shows you medium-term inflation expectations. That's at a 13-year high. That's what the markets are telling you. It's the 5-year break-even rate. It's telling inflation is going to be 2.5% heading to 3% over the next 5-year period. So some signals there. And bonds have responded accordingly. You know, we've seen the US long bond, which is, of course, the benchmark for global interest rates, go from it troughed at about 0.5% at the depths of the crisis last year. It's now 1.75%. So it's up 1.25% over that period. That is the barometer for global interest rates. It's also the benchmark for US mortgage rates. So critical for the consumer in the States. So mortgages are now much more expensive than they were a year ago in the States, and that will slow things down a little bit. And critically, this interest rate is also the interest rate used to calculate the net present value of your share price. So if you've got a tech company, these high-flying tech companies, very long streams of earnings, you discount them back at a very low interest rate, you get a very high valuation. As interest rates go up, that valuation tends to come down. Well, mathematically, it does come down. So that's tending to undermine some of the technology names. And we're seeing that already in the marketplace. These three lines are, the blue one is the SPAC index, which is the Special Purpose Acquisition Company Index, those cash shells which are used to feed in IPOs into the marketplace. Kind of frothy behavior. I would say a lot of SPACs, we talked about that last time, a lot of SPACs hitting the market, and that SPAC index was growing like crazy in January, February into March. And that's come down to be growing at the same pace as both the NASDAQ, which is the technology index, and the S&P broad index. So some of that tech froth is coming out of the market, you know, as we speak. And we're seeing some nervousness around that. And this is my final chart on markets before we get into some technology and then into crypto, which I think is quite a nice segue to crypto. This is the classic chart for market emotions. And we are at a highly emotional stage of the market progression. Emotions are running high. Everyone's talking about the market. Everyone's talking about crypto. Everyone's talking about NFTs, non-fungible tokens. We'll get to those. Everyone's talking about it, including your Uber driver. So, just quickly, at the left, smart money. This is the stealth phase. This is when the smart money comes into the market, spots an opportunity. The awareness phase, which is institutional investors like us coming into the market, hopefully fairly early in the bull market. We're now in the mania phase, which is when the public get involved. Sorry about that. And retail investors ultimately pile into the market. Media attention talks about it, leads to enthusiasm, word of mouth. Are you in the market? Are you not? Oh, I'm missing out. Greed. I'm missing out on the market. I've got to get in. Delusion. Wow, these things only go up. This is amazing. I'm just going to put more money in. This is just great. There's no downside. It just goes up. And then new paradigm. That's the peak of the market. And I would say we're close to new paradigm. You know, cryptocurrencies, NFTs. What's the new thing in the digital space? Resources even. Brave new world of green metals. Everything's going to be good. Even in the mining space, it's now an ESG, environmental play. New paradigm, digital world. We're into those kinds of conversations. That's dangerous. Then you get a market setback, and it's denial. People, oh no, it's just a setback. It's fine. That's the bull trap. You get back in. Return to normal. Oh yeah, fine. We're back in the new paradigm. Then it falls again. And that's the fear. Ooh, gosh, maybe I was wrong. I bought in the delusion phase. Oh, maybe I'm wrong. Capitulation. Yeah, I was wrong. I think I should probably sell. Despair. Shoot, I've lost a lot of money. I can't take this anymore. I just can't take it. I don't care anymore. I'm out. I'm out. I'm done. I'm never investing again. I'm done. And that's the bottom. That's the market phase we're in. So mind your eye a little bit. Let's talk about, let's segue, in fact, into technology. I found some interesting slides in the last couple of weeks. First one, almost a fifth of Facebook employees are now working on virtual reality and augmented reality. Augmented reality, in your glasses, you can see little bits compared to your actual vision. Virtual reality, you're in this thing, hooked up. And in a virtual world. We'll come back to virtual worlds because they're very relevant to NFTs and crypto. Okay. Facebook have a lot of employees. This is probably 100,000 people they're working on just on VR and AR. And Microsoft Mesh aims to bring holographic virtual collaboration to all, and this will happen probably quicker than we think. We will have client meetings and meeting with each other, not on Zoom, but in a holographic environment where you will see me in person. I'll just be a hologram, and I will see you, and we'll have a very normal conversation. It's coming our way, I would say, within the next couple of years. Apple Glass will also use holograms as you're walking around. You'll be able to see helpful holograms which will help you to shop and navigate and see maps in terms of 3D virtual objects. Into space. I found this very interesting. I've read about this before. So harnessing renewable energy. When you're on Earth, the solar power from the sun is very powerful, but when you're in space, it's blindingly powerful once you remove yourself from the Earth's atmosphere. And solar satellites are now coming into existence, and we'll have solar farms in space, which will then beam electricity back down to Earth. We'll be able to harvest as much as we could possibly need within the next decade. The world's first space hotel, this is hard to believe, isn't it? Will begin construction in low Earth orbit in 2025. It's absolutely extraordinary. So that's 4 years from now. We'll be building hotels and space stations and portals into moon landings in space. This will undoubtedly happen this decade, potentially in 4 years' time. And of course, our old friend Elon Musk, the first Mars city construction to begin within this decade, and I'm sure that'll happen. He's talking about taking humans to Mars again in 4 years' time. And the Starship test program is progressing. Once it stops blowing up on re-entry, we'll be okay. But he will get there, and that Starship will take humans to Mars, and we will start constructing things. There's another program which is looking at converting Martian heavy CO2 atmosphere into oxygen so we can live on Mars. These things are happening. And it's a bit of a back to the future, this one. I quite enjoyed this one. Again, on Elon Musk and the future of electric vehicles. These are electric cars, being charged in 1907. So we're back to the future here. It was electric before petrol. Petrol is a crazy, crazy technology, horribly dirty and horribly inefficient. But we had a lot of fossil fuels lying around, and we used them. Now we can use renewables and have the technology again to go back to electricity to drive our cars on a mass scale, which is Elon Musk's vision. We will get there again, a century and a bit later. And my final slide, which is a little bit left field, but I was so interested in it. This shows you the least affordable cities in the world. So these are the cities where our kids will find it most expensive to live. Okay? The most expensive real estate in the world. And it's all either in Asia, including Australia, or in regions which access Asia. So Hong Kong, obviously, Vancouver in Western Canada, Sydney in Australia, Auckland, New Zealand, Toronto, Canada, Melbourne, Australia, San Jose, San Francisco, Honolulu, and LA, all on the western coast of America, all accessing Asia. If you go to Vancouver in Canada, it's very Chinese, and LA is becoming the same. Missing on this list is London, Paris, New York, Tokyo, even Shanghai and Beijing. It's the cities which serve Asia. That's where the future is going to be. That's what Biden's worried about in terms of Chinese influence, and it is happening again in the real world. All right, that gives us plenty of time to talk about crypto. I'm excited about this. It's a pretty exciting area because every time you look at it, it is new and changing at blinding pace, and you learn something new every day. Please do read up about crypto and what's happening. It is an extraordinary, extraordinary place to look. And of course, Bitcoin has gone absolutely crazy. Even this chart is out of date. It's currently trading at $58,000 per Bitcoin. By the way, each Bitcoin does subdivide into 100 million Satoshis. So your 58,000 per Bitcoin, that Bitcoin splits into 100 million Satoshis. So it is very usable in terms of small denominations. If you look at the previous bubble, which we talked about at the time, we thought it was a bubble when it was 20,000. If somebody will remember that, and I guess we called it, and it came back down all the way to 5,000. And there wasn't much to back it then. When we last talked about this in July last year, I guess we identified it as something is going on here, and it needs to be looked at, and it could well be a part of one's portfolio. This is the middle of last year. This is when it was about 10,000. So right at the base of that explosion, what we did not expect to happen, what I did not expect to happen, was it to go straight to 60,000, to go up sixfold. And there's a lot going on in terms of how that happened and why that happened, and I'll get into that in just a second. And one bit of craziness you might enjoy: the first Bitcoin purchase was 2 pizzas in America. It was made by a chap called Laszlo Hanyecz. Sounds kind of Polish to me. And he spent in 2010. So you can see the price of Bitcoin on the slide back there. 2010, he paid 10,000 Bitcoin for 2 pizzas. That was worth then about $40. So he paid his 10,000 Bitcoins at that point worth $40 for 2 pizzas, got them delivered. Those Bitcoin today, of course, are worth $500 million. So I guess the most expensive pizzas ever ordered. He's cool with it, apparently. He said back then, Bitcoin wasn't worth anything. It was cool to buy pizzas with him. He seems happy enough. I'm not sure I'd be that happy. And we've got some craziness in Bitcoin. There is some bubble behavior in Bitcoin again. One of my favorite kind of tongue-in-cheek commentators on Twitter. So clocks have gone forward in the UK and the US, meaning that we miss out on an hour of Bitcoin gains. No compensation either. Daylight robbery. Yeah, so that's going on too. Let's look at the things behind this Bitcoin rise, okay? There's some bubble behavior. Let's put that to one side for a second. Is Bitcoin a store of value in a more inflationary world? Is it digital gold? And we've talked about more inflation. The amount of money being poured into the market. This is the debt to GDP ratio in the States, for one example. US debt to GDP will be the highest ever now. Higher than it's ever been. And that means that the amount of stimulus going into the economy is enormous from governments and also from central banks. So it's about $20 trillion will have gone in by the time we're done in the last 2 years. And world GDP is about 90. So it's more than 20% of world GDP has been put into the economy in cash. I can't see how that can not be inflationary. And you're seeing it in the money supply numbers. So 24% growth rate in 2020 compared to a 6% average. Enormous explosion in the amount of money flying around. And pricing. We're seeing corporates now saying that they're seeing pricing pressure coming through in their supply chains, which are being disrupted, and in wage pressure. And they're pushing prices through to the end consumer. So we are seeing inflation coming through. It will come through this year. So fair to saying it's transitory, temporary. We'll see. We'll see about that. And that has had an effect on Bitcoin. When fiat currencies, dollar, yen, etc., are being undermined by the amount of them around, so their value decreases, you look to stores of value, and you look to gold, and now you look to Bitcoin. And this shows you money supply in the States, which has gone up in the blue line, and the Bitcoin price, which has gone up in the gray line. This chart is now out of date, and Bitcoin has gone straight to 58,000, not 19,000. So money supply up, Bitcoin up, and now Bitcoin's gone even further. Gone up, doubled another 2 times since then. So that's having a direct effect. Also, institutions have been buying into Bitcoin. I'm sure you've seen Tesla famously is a corporate holding cash in Bitcoin. We talked about that last time. JP Morgan, Morgan Stanley, Goldman Sachs, BlackRock all have crypto in their funds. They're launching crypto funds. South Africa is a little behind, I'm sorry to say, in terms of the regulators. It is still a very difficult area to launch in, but we are looking at that, and that'll be clearly an interesting area for us and for our clients. So, institutional demand. This is a larger wallet size, is what this chart is showing, which means bigger institutions are coming in. And one of the bull cases for Bitcoin also is that it's an easier medium than cash or banked cash for many people to use, particularly in the developing world. 1.7 billion adults are unbanked, so they have no access to bank accounts. And so they find transactions obviously very difficult to do outside of raw cash. And they're increasingly using Bitcoin. So there is kind of a vacuum which Bitcoin is filling. That's a kind of a fundamental demand quotient, which will drive demand for Bitcoin. However, we do still have problems. So, sorry, to summarize, Bitcoin, there are some fundamental pluses, absolutely, in terms of its potential as a medium of exchange, particularly for those unbanked people, and secondly, as a store of value in an inflationary world. We'll come back onto both those things in a second. I'll be about it. There are some risk factors around Bitcoin. Crypto hacks is the obvious and first one. I think it is actually quite difficult to hack these things, from what I can read. And the last one was in 2019, which was, a little while ago. But it is still possible, and people still have difficulty trusting, this kind of non-state-backed thing which just sits out there in the ether. Secondly, Bitcoin is not very environmentally friendly. So ESG credentials it does not have. This is the mining of Bitcoins. So we've mined about 19 million Bitcoins so far. We've got 2 million to go to the maximum of 21 million. So there'll only ever be 21 million Bitcoins. It's becoming harder and harder to mine them as the computational puzzles put in place to solve are becoming harder and harder. Like about $1 trillion times harder than when you first solved it back in 2010. And the computational power is enormous. So these server farms are colossal and they suck up an enormous amount of electricity. So the total Bitcoin demand for electricity now is the size of a small nation. So, as I say, not very environmentally friendly. So that's an issue. We also have a thing called Tether. I'll do this very quickly, actually, because time is marching on. Tether is another crypto, which is a stable coin, which is linked to the dollar. $1 equals 1 Tether, never changes. And people use Tether to get into Bitcoin. The only problem is that there's some suspicion around Tether in terms of whether it really is fully collateralized by dollars. And every time they go into the Tether bank account, there's not $1 there. It's a bit of a problem. So they've been fined by the SEC. About 80% of Bitcoin purchases go via Tether. And if I'm buying Tether and I'm not getting that dollar backing, that's a problem in terms of the Bitcoin I'm buying. And Tether creation has mapped the Bitcoin increase. There could be, a bit of a problem there. So, opportunities and problems with the Bitcoin. Let's get to the meat of this, which is what is Bitcoin worth? This is the interesting bit. All right, this is in trillions of dollars. First thing to say, Bitcoin is worth $58,000 per Bitcoin. I would urge you to ignore that number. It's just a share price. It's like saying, and people say, God, Bitcoin's expensive at 58,000. What does that mean? It's like saying GE's expensive at $58. It means nothing. What you need to look at is the market capitalization of GE. How much is the whole thing worth? Bitcoin has gone from $200 billion value to $1 trillion. It went up fivefold. So it's now worth $1 trillion. Is that a lot or a little? Hard to say. Let's try and get to an answer. Some comparisons. Gold. Okay. Is Bitcoin digital gold? Gold is valued at $10 trillion. Gold supply goes up by 1% per annum. It's pretty much fixed. and that is the current gold standard for a store of value, $10 trillion. Should Bitcoin be worth $10 trillion? Should it be worth the same as gold? Possibly. That's a legitimate argument. We'll come back to that. Money supply globally is $100 trillion. Okay? That's the amount of money in circulation and in bank accounts. So if you took Bitcoin and said that's going to replace all money, it would have to be worth at that point $100 trillion, and fiat currencies would go. No more dollars, no more yen, no more euros, just Bitcoin, $100 trillion. Bitcoin goes up 100 times. Let's get into that. I think that's unlikely. I think as a medium of exchange, Bitcoin is clunky and, of course, extraordinarily volatile. It's not anchored to anything. So as a medium of cash exchange, it's a very troublesome thing. It's fine when it's going up and people are buying their Tesla cars in Bitcoin. Happy days. What happens when Bitcoin halves and you've saved up for a Tesla and suddenly you can't afford it anymore because it's worth, you've got half what you thought you had as opposed to cash? That doesn't work in that paradigm. It's simply too volatile in both directions. It's fine when it's going up, it's not so fine when it's going down. The other point, if Bitcoin took over every fiat currency, then you'd have no adjustment of foreign exchange rates to adjust for labor costs. It's what happened in the Euro project when you went from, 12 currencies or 15 currencies to one. Greece and Italy couldn't adjust their labor costs enough, and with a fixed exchange rate, that's why their economies went into recessions. What usually happens, your exchange rate goes down to alleviate the pressure because you're not as productive as other people. You can't do that in the Bitcoin world where everyone's using Bitcoin. It's just clearly impossible. That is a big problem. Therefore, it won't happen. No central bank control. Nation states discard their control over the money supply and a lot of our lives. That is not going to happen. So in my world, Bitcoin does not become money in any meaningful sense. What it is right now is a very strong currency. It's like harping across a currency trade, which has gone incredibly well. Let's say the yen went up fivefold, or went up twofold, and then you discovered it. It's like, oh, I'll buy some of that because it's strong currency. It goes up and up. This is the strongest currency. I can buy a lot of stuff with that. It's now a very strong currency. That'll come and go, okay? And it will be used as a medium of exchange to the extent that people are used to that volatility and can stomach it and will play that currency game. Same as we play the yen or the dollar or sterling or euros, whatever it is. They'll play that game. Fine. It will not become blanket money supply. That's my view. Is it a store of value? So it won't become 100 trillion, to be clear. Is it a store of value like gold? Now, gold is a belief system. That's all it is. People believe in gold because they believe in gold. It's not actually worth anything, but it's been worth something for millennia. And currently it's worth $10 trillion or $1,700 an ounce. So it's an arbitrary number, but it's a belief system. Now, in a digital world of millennials, my view is that that belief system in Bitcoin is strong. That belief system in cryptocurrencies is strong. And that belief system in Bitcoin as the cryptocurrency with a finite amount of supply, I think Bitcoin will win that battle and it will become the store of value. So I think Bitcoin could and probably already is digital gold. Could it therefore become $10 trillion in value? It's entirely possible. But interestingly, in the recent mania around cryptocurrencies, Bitcoin has not gone up because it's a store of value. It's gone up because all cryptocurrencies have gone up. If you look at all cryptocurrencies, they've all gone up by the same amount. And Ethereum is not a store of value because it has an infinite supply. And a lot of these coins just issue. So it's not a store of value argument at this point. So it's not the reason it's gone up. It's gone up because there is mania around cryptocurrency. And part of that mania is justified because in a new digital world, blockchain will become more prevalent. And crypto will have more of a place in the world. That is true. It's become a little bit too much right now, but that is true. But Could Bitcoin become a store of value and a legitimate part of your portfolio? I would say yes. Is it worth more than today? In the long term, very possibly. In the near term, we're in a bit of a bubble. Which leads us finally into NFTs. I want to spend 5 minutes on NFTs because I find this so fascinating. I hope that was helpful. Non-fungible tokens. Okay, non-fungible tokens. Fungible is $1. I give you $1, you give me the $, it's fungible. It can be replicated by other dollars. Non-fungible it means it can't be replicated at all. So your non-fungible token is this digital work of art is the only one which is represented by that NFT, and therefore has efficacy in the same way the Mona Lisa has efficacy in that there's only one of them. You can take photos of it, but there's only one Mona Lisa. There is only one of these, which is the digital artwork, which was bought by Vignesh Sundausen. I'm sure I pronounced that incorrectly. Who's from Singapore and set up the first NFT fund called Metapurse. And he goes under the moniker MetaCoven, and he bid $69 million at Christie's 2 weeks ago for this work of art, which is a digital work of art created by a chap called Mike Winkelmann. Mike Winkelmann has been publishing a single digital artwork every day for 13 years. Every day for 30 years. And this work of art is all of them in one. It's 13 years of work. It's called Every Days, the first 5,000 days. And MetaCoven bought this work of art, as well as all the other 20 pieces which were put on sale at Christie's by Mike Winkelmann, who goes under the moniker Beeple. So Beeple put out 21 for sale. It's only a second sale. And this one went for $69 million. There's a video online of Mike Winkelmann watching this auction. It's actually quite amusing how much money he's made. And what MetaCoven has bought is a link in the blockchain. He's bought a link in the Ethereum blockchain, which is represented by this NFT, which represents this painting. And this NFT thing is going. There's been $300 million spent on basketball clips. So you buy from the NBA an official highlight of a basketball famous moment, a video, which is then yours forever. And it's again, you can watch it online, but yours is the original. Okay, this is all getting a little bit crazy. But there's a point to NFTs, which I'll get to in a moment. I'm conscious we're running out of time here. Or $2.5 million. Jack Dorsey's first tweet, just setting up my Twitter, 2006. That just sold for $2.5 million. And finally, this is a cracker. Okay, this is getting now really, in my view, crazy. This is a virtual digital home in a Martian setting. Okay? It's in a prime piece of Martian real estate, apparently. And someone just paid £500,000 for it, proper money, UK pounds. £500,000 for this digital home on Mars. It's just a digital home. It's not on Mars. Okay, that's an NFT. And finally, these artworks will be displayed in digital galleries in metaverses. A metaverse is literally beyond the universe. It's a shared virtual space which you can put your VR goggles on, and you will live in a metaverse, and you'll walk around and you will look at these works of art. It's a totally different world which lives alongside our world in digital land, where you will view these works of art and walk around and have homes and meet other people. You can do this today. There's a website called Second Life, which you can go in and look at this stuff. And that's where these works of art will live. Okay, there's a brave new world coming here, which is very different to the one we're used to. Just be aware of that. There is a bubble in NFTs, and this bubble behavior worries me in terms of this particular area. The final point is that NFTs can exist because they are a smart contract on blockchain. And smart contracts on blockchain will allow you to own pieces of real estate or real infrastructure or even a share. These parts of the blockchain will be the new modes of ownership. So NFTs, like any bubble, there's a core truth to them. NFTs are here to stay, and they are a manifestation of what the blockchain will do to our economy. And that's part of the reason crypto are doing so well. But on the blockchain part of the economy, we will have central bank digital currencies. We'll have stable coins, which are not volatile. It won't just be Bitcoin. It won't just be Ethereum. Blockchain is here to stay. But the current mania around crypto is a little overdone. But stores of value specific to Bitcoin, I think so. Wow, there's a lot to get through. Jeez, I'm exhausted. We've got questions piling in. Wow, this is a really hard question. How does a cryptocurrency become realizable to an estate on death if it is not regulated? Wow. I don't really know. I'll hazard a guess. It'll either become regulated. Actually, I think it'll become regulated because it'll have to be, because so much ownership will exist on the blockchain. And these virtual wallets, you know, they have passcodes which you mustn't lose, because if you lose them, they're gone forever. But these virtual wallets will be able to be transferred on death, for example. So I think as part of your will, your virtual wallet will be bequeathed to whoever you get, or your ownership within it will be bequeathed to your various children. So I think that's actually, now I think about it, fairly solvable. At what point in time do central banks step in to regulate cryptocurrencies and bring it in line with other mainstream assets? I think they'll have to do it fairly soon. They want to regulate them to keep control of them. They won't want to regulate them because that'll make them bigger and they'll lose control of them. So it's a delicate, I think they're getting their act together pretty quickly in terms of central bank digital currencies, CBDCs, which will come to dominate, and nation statehood will remain intact. And they will want to regulate crypto, private crypto, very tightly, which I think they will do as an asset class or potentially a currency. What about other altcoins? And then I'm going to pause and attempt to wrap up. I feel like I've been through a lot today. What about other altcoins like Ethereum? As I said, it's very interesting. Other altcoins. Sorry, altcoins are alternative coins to Bitcoin. Very much the same, except some don't have finance supply. Some will have a part to play. Ethereum, I highlighted middle of last year as having a big part to play, because the blockchain, if you operate on the blockchain right now, you've really got to use Ethereum to execute transactions. So they'll take a cut off each of those things. So Ethereum, yes, and blockchain will become bigger. If you want to play blockchain, buy Ethereum. If you want to play store of value, buy Bitcoin. There are a plethora of other altcoins, all finding their kind of niche in this new world. I'm going to stop these slides because we've put these up enough. All trying to find their way in this new world. And it'll be like the internet bubble in 1999. There were thousands of companies, and a handful of them survived. So it'll be the same in crypto land. So just be careful. I think Bitcoin and Ethereum, yes. The others, not sure. If you're going to buy them, buy a basket. Last one. Is quantum computing not a threat? 1 second. That question then disappeared. I got the first part. Is quantum computing not a threat? Quantum computing, yes, probably potentially a threat to the efficacy of the blockchain, which supports Bitcoin. That is a concern, because quantum computers are mind-blowingly more powerful than the ones we have today. They'll mine them quicker, so we'll get there quicker. I don't think that's a big problem. But could they hack in easier? And could they undermine that trust in the store of value? Yeah, potentially. I think that's definitely a flip side of the bull argument. And finally, if crypto growth is driven by sentiment, will it eventually be incorporated in old mutual portfolios, either wholly or partly? I think probably. I think it's just a matter of time. We're launching the artificial intelligence fund, or the AI fund, within the next half year, which I will run, and we may well have crypto in that, and it'll be a collection of forward-thinking ETFs which will capture a lot of these decade-long trends like crypto. So I think as part of a portfolio, probably a very specific portfolio to start with, yes, like the AI fund. As part of our multi-asset funds, probably a little bit later. So the kind of bleeding edge first, and then the broad-based one. And it may be that we get to launch kind of a pure crypto fund. I would actually quite like to do that. So let's see. All right. just a quick summary. Thanks for coming. Markets, mind your eye a little bit, quite frothy. Crypto frothy in the near term, but will have a place in portfolios in the longer term. Bitcoin will win out more as a store of value than as a form of money, and therefore more like potentially $5 or $10 trillion as opposed to 100 trillion, which leaves you upside for Bitcoin from here. But we may see a setback first because it's just got a bit overblown in the near term. But it will be a part of portfolios at some point, without doubt, in the next couple of years, and without doubt will do interestingly over the next decade. So you need to be on top of it. And I encourage you to read about it because it's a lot of fun. I hope that was helpful. Lovely to see you. Hope you enjoyed the new platform. Love to get feedback and see you next time. Thank you.